Everybody, it is Tom Sheehan of the Sheehan Real Estate Group of Compass here with your Q2 Greater Boston Real Estate Market update for the year 2024. I've survived another spring market in the Greater Boston Real Estate. And I want to give you an insight on what's going on out there, what we've experienced over the past 3 months, and then give you a little idea of what we could expect for the rest of 2024. And as you know, we always start with the median sale price of a single family home in Greater Boston to kick us off. And again, if you've seen these videos before, you know we are in a very seasonal real estate market here in the Northeast. So we compare year over year to account for that seasonality. So this is the numbers for Q2 of 2024 when we compare them to Q2 of 2023. And what you see is we've seen another jump in the median sale price of a single family home in Greater Boston this year, up almost 9% to a median sale price of $950,000 for a single family home in Greater Boston. And because of that seasonality of our real estate market, usually this is going to be the high water mark for prices in Greater Boston for the year 2024, but still a staggering number nonetheless. Condos are a little bit of a different story. Condo prices were essentially flat this year compared to last. Last year at this time, the median sale price of a condo in Greater Boston was $728,500, and this year it was $729,000. Last year was a weird year for condos. We saw the median sale price of a condo skyrocket between Q1 and Q2 of 2023. You can see that jump right here in that graph. And this year, it was pretty marginal. It was only 2% from Q1 to Q2. So an interesting number. And if you've watched some of my past videos, you're probably going to say, Tom, you're going to tell me it all has to do with inventory. But surprisingly, it isn't necessarily the driver here. And it's a little curious how we arrived here. So looking at that inventory, specifically as single family homes, we did have a pretty good increase in Q2 of this year compared to Q1 of last year, which if you may recall, if you look at this graph, it was dismal. This is going back to 2016, and we had never seen that few of homes at the end of last year coming into this year. And we saw a flattening of the inventory from Q1 of this year to Q1 of the last year. And thankfully, we saw a dramatic increase in the number of single family homes listed for sale with a 17.6% increase in the number of new listings. Now, again, if you look at this graph, the new listings this quarter, this is last year Q2, this is this year Q2. Going back to 2016, we're still well below a supply that we were used to, but at least we saw an increase for this year to give some relief to the single family home buyers. What's crazy is that increase in the inventory still resulted in a near 9% increase in the median sale value of a single family home. So if a 17% increase in the number of new listings for single family homes resulted in an 8.5% increase in the value of a single family homes, if condo values were flat, you would think, wow, we must have seen a ton of condos hit the market this year compared to last. And in fact, we did not see a dramatic increase in the number of new listings of condos in Greater Boston compared to last year. So we only saw an increase of around 7% on the number of new listings of condos this year, this past quarter compared to the year prior. So that's where, the numbers get a little surprising. You see this much bigger jump in single family home pricing, a lot more inventory, and a big jump in pricing. You see a smaller jump in condos and a flat pricing of condos. And so that really flies in the face of this whole supply and demand thing that I'm harping on always. What I think this demonstrates is the affordability and the fact that buyers that are looking to buy a home weren't willing to buy a condo and really wanted a single family home. And so you had buyers, as this affordability with interest rates staying higher, and something we'll touch on later, remaining really tough. Buyers just weren't willing to buy a home that was a condo, and therefore were gravitating to single family homes and really being competitive for the single family homes, gobbling up that inventory and gravitating away from condominiums, where there is some sacrifice in terms of home ownership when you elect to buy a condo versus a single family. And if we look at the active listing, the active inventory, so this accounts for some of the inventory that kind of stays on the market and doesn't get absorbed. It's up 15.5% this quarter compared to last quarter. So a little bit below the active listing inventory, but still a little surprising to see that big of a jump in the median sale value, which speaks to the amount of demand that we would see active listing inventory kind of hovering around similar numbers to the new listing inventory. And what that says to me is that people still are not willing to buy just anything right now. They're going to be particular about the home that they want. And when they see that home, they're willing to be very aggressive towards it and pay more than the last person paid for the similar home, but they're not willing to sacrifice some of their wants and needs to buy any home. And we look at the condo market, the active listing inventory is up a little bit compared to the new listing inventory. So there's a bit of accumulation of inventory in the condo market, which would explain some of the flatness in the median sale price of a condo in Greater Boston. So that would be this number here, right? So we're seeing a little accumulation of inventory and getting back to those pre-COVID years in terms of inventory, which again is good for pricing and good for home buyers. If we look at the days on market for a single family home in Greater Boston in Q2 compared to Q2 of last year, it's unchanged. It's still about 15 days, which is in the grand scheme of real estate markets, a very fast paced market, but also speaks to if you have a lot of homes going under agreement in less than a week, there's definitely some listings out there that are lingering on the market and aren't just meeting the buyer's needs, either in terms of price or condition. And we see similar things in the condo market. Higher days on market than single families speaks to the demand for single families over condos, but unchanged from last year, which is a little curious given that we've seen added inventory and flattening pricing, but it's nothing dramatic and not too much to read into this, in my opinion. Now, this is a number that surprised me, and I was having a hard time squaring in my own mind. So the number of sales of single-family homes, despite that rather significant increase in the amount of inventory and the significant price increases, the number of sales of single-family homes in Greater Boston was only up 1.8% this quarter compared to last year's second quarter. Now, this might be just a timing anomaly. Since it takes about 6 weeks to sell a home, an active listing that or a new listing that is included in that inventory data could accept an offer in, say, early mid-June. And because it takes 6 weeks for that home to close, that home that's going to show up in the inventory numbers isn't going to show up in the closed sale numbers. It still doesn't kind of account for that as big of a disparity as there is. So I don't know. I'll maybe have to do some research into how that can be, but that number was surprising to me and just kind of speaks to as we have very low inventory numbers historically, we're also having a lot fewer home buyers out there. If you look at these closed sale numbers, you can see right here, the last 2 years, much, much lower than what we're accustomed to in Greater Boston. So while pricing doesn't necessarily reflect a depressed housing market, the number of transaction is reflected in these numbers and really speaks to just how much less the activity of the real estate market is. And again, because something we'll get to in a little bit, it's the high interest rates. All right, some technical difficulties there. Not sure if you'll notice them or not, but back to the number of sales. So condo sales also down 2.6%. Now, again, speaks to just how depressed the actual real estate market is from a transactional side, but a lot more in line with the lower inventory numbers and the flattening of pricing. So these numbers make a lot more sense than the single family numbers. And this is really the big culprit in all of this. No surprise, it's mortgage interest rates. Now, if there's any good news, over the last quarter, they've ticked down a little bit. And over the course of 2024, we've seen a lot more stability in the mortgage interest rate for the 30-year fixed rate. As you can see right here, we had a lot of volatility the last couple of years. This goes back to 2020, so we're still encompassing those crazy, crazy low interest rates, then the very sudden and abrupt spike in interest rates. And then we had a lot of this volatility that you can see here. So if you really look back at the past 6 months, so Q1 and Q2, we didn't have that same level of volatility. So there's a lot more predictability in the mortgage interest rate environment. And what's been even nicer is we've seen a little bit of a ticking down of the mortgage interest rate over the past 3 months. So while we haven't seen the interest rate reduction that a lot of people were expecting and calling for in the middle of last year and at the end of last year, at least with the less volatility, you have more certainty, which makes people more comfortable when they're making decisions. But it remains to be seen if we're going to see that significant tick down in mortgage interest rates that a lot of people have been calling for and expecting for this year. And while the Fed fund rate that everyone speaks of definitely has a significant impact on mortgage interest rates, the lenders have been a lot more conservative in terms of how they see things and make their pricing for mortgage interest rates. Okay, so now you know what's been going on the first half of the year. Now what's important is where do we think things are going for the rest of 2024? Well, I think we're going to see improved buying opportunity for a lot of buyers who've been able to stick it out and have been able to stay in the market despite some of the difficulties between all the other distractions that we've been having in the world, specifically in this country, the affordability issue, and just the general kind of economic uncertainty that we've been experiencing. And because of all that, we're going to have cautious buyers and sellers. People, especially in election years, people get a little unsure of where things are going to go, and volatility and uncertainty tend to have people not do anything. I also think we're going to see prices leveling out here for the rest of the year, which is typical. They're not going to be as high as we see in Q2. Again, you can go back to that graph and see how we are never linear. It's always a little up and down. And I see no reason to expect that to change for the rest of 2024. And hopefully the stabilization of mortgage interest rates allows that to happen. If we start to see a lot more volatility of interest rates, it's probably going to just mean a lot fewer transactions in the real estate market, and then a lot less certainty on how the rest of the year will play out. So if you're a buyer, my advice is to get out there. Do not wait. This is the time of year when the deals start to happen, where you look back in a year or even this upcoming spring and look back and be like, man, I can't believe that house went for that price. The reality is this is a slow time of year for real estate. We're seeing more inventory, so there has been more homes available to look at than we've seen in at least a year and a half. And interest rates are pretty stable right now. So take advantage of this market timing. We always lose buyers this time of year, either because they found a place, they're exhausted and want to focus on their summer and their vacations and all the other things they have going on in their life, or in many cases, they've renewed their lease and now they're back to renting and they're saying to themselves, all right, didn't work out this year, but we're going to be a lot more prepared next year when we can time this market a little bit better. And so timing the market's never a good thing. I understand everyone's circumstance kind of dictates what they can do, but take advantage of the market and don't be afraid to make an offer. Homes that have been sitting on the market, I can tell you, those sellers are very nervous. So don't be afraid to make an offer that might not be what the list price is, but might fit what your needs are. Now, are we still going to have multiple offer situations? Are we still going to have homes going above the asking price and for terms very favorable to the seller? Absolutely. We're still in a very depressed inventory market, but instead of being 6, 7 offers, maybe it's 2 or 3. Okay. And so anytime there's less competition, the price and terms are going to be better than they would be if there was more competition. So get out there. Don't try to time the market. Try to take advantage of this current market that we have now, and don't be afraid to make an offer. If you're a seller, you got to adjust your expectations. You may have had a neighbor or a family member that put their house on the market in April or May, and they were talked about how many crazy offers that they had and how many droves of people through their open house. That was the spring market. We are no longer in the spring market. From this point forward, things get a lot slower. So you have to adjust your expectations. The reality is, relative to history, now is still a really good time to be a home seller. Inventory is still relatively very depressed compared to prior years, but the reality is the market conditions right now are not what they were a few months ago. So even more important, make sure your home is ready to go. You want it to be look as well as possible. You take care of all those little things that you've been ignoring, but are going to be glaring to a buyer who is faced with an environment where homes are costing them a lot of money. So you want them to be at ease when they come into your house. You don't want your house to look like it needs a lot of updating and a lot of work to be livable. And also understand the trade-off between selling now and next spring. We can't predict the future. We have no idea what the future will bring from an economic standpoint and a housing market standpoint. But the reality is, we're a very seasonal market, and the chances are your home is going to sell for more in the spring when we've a replenished larger buyer pool than it will right now. So understand what those trade-offs are and what that would look like and why it might make sense to sell now versus waiting to the spring. And that's all I got. Thanks for watching. I hope you found this helpful. I hope you found it informative. As I always say, everyone's personal situation, whether or not you're a home buyer, home seller, both, or a renter, is unique to them, and everyone's personal timing is dictated by their circumstances. So if you have any questions about your situation, I'd be happy to tailor my thoughts and my opinions to your situation. You can reach out to me at any time. Either give me a call, shoot me a text, or send me an email. I'm here for you. Thanks for watching, and we'll see you next time. Bye.